Warren Buffett is probably the most famous and one of the most successful investors of all time. He suggests that most people should be buying index funds. Picking individual stocks that win is a hard task, and index funds are what is going to be the best for most people. He suggests that over 90% of people should be investing in index funds rather than picking individual stocks because it will be very hard to beat the market. You have to have some type of discipline and have to read many financial statements, and even the best mutual funds and hedge funds cannot even beat the market consistently. So that's why Warren Buffett likes index funds. And in today's video, we are going to go over an index fund and an ETF that we specifically recommend on this channel and we like on this channel. I personally hold this index fund in my Roth IRA account, and I think it is one of the top index funds that you can hold. And we're going to hop right into the financials and exactly what this index fund and get into the numbers of this ETF. But what's going on, guys? My name is Phil from Millennial Money Gains, and welcome back to a brand new video. If you guys are hyped for this video, please make sure you smash that like button. Also, make sure you subscribe to the channel. We are growing here on the daily, and I appreciate all the new faces. And I also appreciate anyone that comes on from this video. But with that being said, let's get right into the ETF. So, what we are talking about today is ticker symbol DVY, and that is iShares Select Dividend ETF. It's currently trading at $128.89, and it is up 10.94% on the year, which is pretty good. And if we can consistently get above 10% return from this dividend every single year, then we are sitting pretty, because it also offers a market-beating dividend yield. So let's hop right into the dividend stats on this ETF. So Seeking Alpha does give their dividend yield a A, and the dividend growth rate a C, because I guess they're not growing as much as other ETFs in the same category. So we're going to hop right down. So they do pay a 2.76% dividend yield. They have a 5-year dividend growth rate of 6.28% and a dividend growth for 1 year. They pay a quarterly dividend of 89 cents per share. So they do pay a consistent dividend. We're going to go right in and see how long they've been paying this dividend. But what we are fighting for here is also not just the dividend, but also the growth and appreciation of the stock. So as you can see here, they have a pretty consistent dividend that it kind of bounces around a bit, but it stays pretty consistent from minimum 75 cents per share to a maximum of about $1 per share. So it stays pretty consistent in terms of that. We're going to take a look at the holdings of this ETF. So it has 26% in utilities, another 23% in financials, 9.36% in consumer defensive, 7.66% in energy, 7.29% in consumer cyclical, 6.43% in communications, 5.58% in technology, 5.32% in healthcare, 4.53% in industrials, and 4.03% in basic materials. Now that is a pretty good diversification, and 26% of it is utilities, so you got that consistent dividend there. Most utilities companies pay a pretty consistent dividend. So the top 10 holdings, we're going to go in here. First one is Altria Group, 2.37%. Altria Group does pay a pretty high dividend. Second is One OK at 2%. And then they have IBM at 1.82%. They have Valero Energy Corp at 1.8%. They have Philip Morris International at 1.63%. They have Gilead Sciences at 1.61%. They have LyondellBasell Industries at 1.6%. AT&T at 1.57%. Prudential Financial at 1.57%. Edison International at 1.56%. So they do have a total of 106 holdings, and their top 10 holdings make up about 17.5% of this ETF. So a pretty decent breakdown there. There's definitely some major companies there, such as Altria Group, Gilead, AT&T, Prudential, Edison. So we have some major companies there. And now we are going to go into the risk according to Seeking Alpha. So the standard deviation risk is rated an A, and the short interest is rated a D as a percentage of shares outstanding. So it's 0.62% with an asset class median of 0.19%. But still 0.62% is really not a huge short interest at all. So that is not something I would be worried about at all. And we're also going to take a look at their expenses, right? So they do have an expense ratio of 0.38%. with an asset class median of about 0.29%. So it is a bit higher, but nothing that is going to be breaking the bank, in my opinion. Now, obviously, you need to be, since they do, most ETFs have, if not all, have an expense ratio, you do need to value that and see how that will affect the growth of your portfolio. So this is one for me that I just set it and forget it. Now this is, like I said, it's in my Roth IRA. It takes up about, I want to say about 10% right now of my Roth IRA. Most of my Roth IRA gets put into another dividend ETF, which is VOO or VOO. I will definitely follow up a video with that, because I do want to show you guys a little bit into more of my other investments, such as my Roth IRA or my Roth 401k. I do want to show you guys a little bit more into that. Also, even getting into others than dividends, I would like to show you some other of my investments, maybe crypto or my startup investments. I would really like to show you guys that. If that's something you guys want to see, make sure you comment down below. I really would like to see if you guys want to see all that, or if you want me to just stick with the dividends. I do love talking about dividends. Dividends are my main investment source, and that is where I put most of my money. But I do have different investments that I would like to share with you guys. So let me know if you guys want to hear about that. If not, no big deal. I still love talking about dividends. But that's going to wrap it up for today's video. If you guys did like it, please make sure you like it. I really do appreciate it. Consider subscribing to the channel. We are growing here, and I would love to have you guys on board and hear your thoughts on maybe some videos you would like to see, some different stock analysis. We post here at least 2 times per week, every Sunday and every Tuesday. So make sure you guys are subscribed so you can see that. And remember, just keep investing. If you don't have the time to do the research, then put your money in an index fund. Even if you're starting with $10, it will really go a long way. I'm telling you this as I'm 24 right now, so I'm starting young. People started younger. I wish I started younger, but the best place to start is right now. That is the best time, because it will give you the most value on your dollar. For every dollar you invest right now, it could turn, depending on your age, it could turn into $50, into $100 each dollar that you invest. So you need to take that into consideration and start investing now, especially if you are getting up there in age. You need to start right now, because you won't have much time to take advantage of compound interest. But I will leave it at that. I appreciate you all for watching, and I'll see you in the next video. Peace!